All right, what's going on, everybody? Welcome back to the MIE Trading Podcast, the podcast where I share my knowledge and experience on day trading strategy, risk management, trading psychology, and everything else that you need to know to become a better trader. My name is Brendan Murphy, and today I'm going to be teaching you the 3-step process that you can use to avoid failure once and for all as a day trader. And I mean, literally never ever blow up an account again, never fail again, never stand to lose so much that you cannot recover as a day trader ever again. It's extremely simple, and I'm going to go through the entire process in this video. But very quickly, before I do that, please remember to hit the subscribe button and click the little bell so you never miss out on the latest ways that you can improve your trading. So with all that said and done, let's get into the topic. So what's the secret to never losing again as a day trader? The secret is allocating the correct amount of capital per trade. Now, I'm sure you've probably heard this many times from a ton of other people out there. You know, you've heard it before. Risk 1% per trade, risk 2% per trade, risk 0.5% per trade. And they give you these blanket risk management rules that you must follow no matter what. Now, that's wrong, okay? Sure, they're probably helpful in general, and for people that have no risk management practice whatsoever, those kind of rules would be extremely beneficial. But the problem with those is that they're not tailored to your specific situation whatsoever. So while those rules might be very beneficial for some traders because they happen to pertain to the specific situation a trader is in, they'll be very damaging to a different trader with a different mindset, a different psychology, a different strategy. So yeah, they can help some people, but they can damage others. So in this video, I'm going to teach you how to make your own custom risk allocation per trade based on your specific situation, your strategy, your risk tolerance, and everything else, so that you know you've got it set up properly. And the first step in doing that is to determine how much of your capital you can lose and be okay with losing. So let's say that you have a day trading account with $1,000 in it. Can you handle losing $100 and be perfectly okay with it? Not like, oh man, I lost $100. That absolutely sucks. No. You need to be, okay, I lost $100. It's not that cool, but it's okay. I've planned for this. I'm going to continue exactly as I was before because this is okay. If that's your reaction, then it's good. If your reaction is the first one, that's bad, and the number needs to be lower. So figure out your number. Is it 10%? Is it 20%? Is it 30%? Some people might say 50. Some people might even say, I risk it all. In my experience, both as a day trader and as a coach, I find that the number actually tends to be around about 10 to 15%, where people start to get emotional and make bad decisions as a trader. Now, I'm not saying that your number is 10 or 15%, but maybe start there as a guideline. For me personally, my number's 10%. Once I lose 10% of my capital, that's when I start feeling emotional, and that's when I start feeling urges to make bad emotional trades. So I know that I need to set my risk management up so that I'm never going to lose more than 10%. So that's step one. Figure out the maximum drawdown of your capital that you can handle and be okay with. So for the rest of this tutorial, we're going to use that 10% number for reference. Moving on to step two. Step two is, first of all, if you haven't backtested your strategy, backtest your strategy. For step two, you need to know what your win rate is. So if you have no strategy, obviously you should probably get a strategy. There's plenty of free ones out there. I'm not claiming they're any good. I do make strategies. That's a premium service, but that's not what this video is about. Get a strategy and backtest it so that you know what your win rate is, your average win, average loss. Get all the statistics so that you have some confidence in that strategy. You know it works, the backtest is profitable, and you have confidence. Okay, so assuming you have the strategy and assuming that you've back tested, what's the win rate of that strategy? The reason that we need to know the win rate is because that's going to tell us the maximum consecutive losses your strategy can possibly generate. So for a handy little guide, I'm going to give you some numbers here. Now, these numbers are based on my own formula. They are not necessarily mathematically accurate, but it's my formula that I use that guarantees me that I'm not going to lose too much. So if your win rate is 80%, the maximum consecutive losses you're likely to have is 4. If your win rate is 70%, you're likely to have 6 maximum consecutive losses. If your win rate is 60, that equates to 9 maximum consecutive losses. If your win rate is 50, that's 12 consecutive losses. A 40% win rate is 17 consecutive losses. 30% win rate is 24 consecutive losses, and a 20% win rate is 40 maximum consecutive losses. Again, they're not necessarily mathematically accurate. That's based on my formula that's quite strict so that I know that that is the maximum I'm likely to lose in a row. So how does that help us? Well, we can now use this number in combination with our original maximum drawdown number to actually figure out the optimum risk per trade for us. So that takes us to step 3, which is plug in your numbers. For example, for me, if it's a 10% maximum drawdown that I can handle, and let's assume that my strategy has a 50% win rate. Now, we know that 50% win rate is 12 maximum consecutive losses. So what I'm going to do is take 10, which was the maximum drawdown I can handle, and divide that by 12, which is the maximum losses I'm likely to have. And that gives me 0.83% that I should risk on every trade. And when I do that, I know that no matter what trades I take, as long as they align perfectly with my strategy, I'm never going to lose more than 10% of my account, even in the absolute worst case scenario. So I am safe. That's how to make sure that you're never going to go broke as a day trader. Success as a day trader does not come from winning trades. Success as a day trader comes from not losing when you're wrong on trades. You can be wrong, however many times, and as long as you have your risk management set up perfectly like this, you're never going to lose. And that's going to allow your winners to give you that edge, to give you that long-term return on your capital due to the law of averages. So let's just quickly give a couple more examples. Let's say that you had a 70% win rate. So I would take 10%, 10 divided by 6, which was the maximum consecutive losses for a 70% win rate. And that gives me 1.66% that I can risk per trade. And it's higher because I'm not going to lose as many trades in a row, so I can risk bigger on every trade and still never hit my maximum drawdown limit. So I'm always going to be psychologically okay. My account's always going to be there because I'm never going to exceed my maximum drawdown limit. And then let's flip it up. Let's say you got, again, 10% win rate, divide that by 40. Which was a 20% win rate strategy. Now you can risk 0.25% per trade. Now it's a lot lower, but we're dealing with a 20% win rate here. Whether you want that or not, it doesn't matter. You know that with that 20% win rate, you can risk 0.25% per trade, and you're never going to exceed a 10% drawdown in your account. Now, please remember, for you, please replace that initial 10 number with whatever your risk tolerance is. Is it 5? Do 5. If it's 10, do 10. If it's 15, do 15, and so on and so on. Use your numbers for this, not mine, because my risk management is my risk management based on my strategy, the way I trade, my psychology, mindset, emotions, and all of that, and you are likely to be completely different. So now that you know the 3-step formula, as long as you follow this and implement this risk management tip into your trades, you can be sure that you're never going to lose more than your maximum drawdown again on your capital. You're never going to get into that point where you get emotional and take revenge trades and feel greedy or feel regret and then go in this death spiral of emotional trades, because you're never going to reach that threshold that makes you doubt yourself. And the other thing that you want to do is, as you keep trading, your win percentage is going to change. So market conditions change, now your strategy performs a little differently, and maybe your win percentage has dropped from 50 to 40. Now you're going to have to adjust your risk management levels so that you're risking less per trade. Or if you keep trading, market conditions change, win rate goes up, now you can increase the risk per trade. As a general rule of thumb, you should choose some kind of schedule and stick to it. So maybe update your risk management levels every week or every month or every fortnight. I would try to do it at least once every month. More than that, then you do risk losing more than you can handle. But yeah, that's basically everything that I had today. Hopefully these 3 tips allowed you to improve your risk management game and become a better trader. If it did, hit the like button and leave a comment down below of something else that you might like to see. If you found it valuable, share it with a friend who might find it valuable as well. And if you want to take your day trading a step further, you can see all of my professional services at mie.trade. So thank you very, very much for watching the video, and I'll see you again on Wednesday for another little short video. Yeah. All right. Bye-bye.